Did we listen to I missed the music. I hope that you brought up the Beastie Boys. That would have been great. 8:46. Let's actually move into the show. Let's get on with it. I hope you guys are having a good morning. It's a very odd reading this morning, but I'm going to walk you through exactly what is going on. Can you share the EM labels? What does that mean? You tell me what that means, and I will share everything with you. All right, let's get to Zoom. There we go. Cool. Killing it. So far, so good. We haven't crashed anything out yet. We didn't. Oh, okay. Very good. We'll talk about market momentum. We're going to talk the runner. We'll figure it out. That's the theme of the day. The theme of the day is we will figure it out. I'm just going to tell you right now. Yesterday was a weird day in the market. And just to kind of preface this, I do just want you to know that we finished flat yesterday, like literally 0.00, which is very strange. Goldman Sachs did come out. They said that systematic selling hit lower rate exposure on the financials, particularly the REIT, anything that is not a REIT. Zero Hedge saying the degrossing amplified the move because the group is crowded long. Crowding is now playing a significant part in who wins and who loses across various sectors. And it's all about the market right now, trying to determine what is the impact of AI. And we've talked a little bit about this. We've dug deeper into the concept of who are the winners, who are the losers. Markets don't want to be exposed to a series of sectors right now where you can wake up, Claude now all of a sudden creates some plug-in that is a systemic threat to an entire industry. So where do we put our money? Well, there are going to be winners and losers in AI, obviously. The hardware has been doing well, and you're seeing hardware long, software short. That has been the pair trade that the broader market has been running right now. And my general consensus remains the same. I don't care. I don't want to be playing in that little sandlot if a lot of companies are not productive and showcasing a lot of strength in their underlying fundamentals. I want to own stuff that matters. We were having a conversation the last 48 hours. People are really going back to that book, The Fourth Turning, or The Four Turn. I don't know what the hell the name of it is. But I said, what if all the problems that we're having right now, what if AI actually creates the first turning, right? We go back to a start of relative enlightenment. And what's interesting about that is that it relocates. People keep saying, where is money going to flow? It's going to flow into real assets. It has to flow into real assets, the things that matter. So we're going to start with that thesis. We're going to talk about that today at 12:30. The winners, the losers, that trade. How does the consumer economy work when no one has a job, Big Dave asks. Luddites. We will find a way. We will all work in healthcare, or we will all just start, I don't know, we will monetize free time. We'll figure it out. We've done it forever. It'll be fine. I want to remind you, everybody worked on a farm 250 years ago. Now, our number one export in America is, at one point, was television shows about dancing. We'll be fine. Guys, it's going to be okay. It'll be great. Hello, February 12th. All right, jobless claims 8:30. I didn't see it. I assume that everybody's unemployed. Better have a sense of humor about it. Overall, expectations, we're going to be looking at the more important number today, existing home sales. That comes at 10 o'clock. So big number there. CPI comes tomorrow. Dollar yield reaction tomorrow. Earnings, Cisco, McDonald's. McDonald's is a big one. Nice little move today, 1.5%. We'll dig into that momentarily. APP, yeah, that didn't go well. AppLovin, 7% drop. And then, of course, Cisco, America's dumpster fire, down 6% today. Look for Cisco to continue to bleed off. Look at some other names. We got to pay very close attention to GLD, the DXY, and the BLK today, not earnings. Looking on the left were the earnings to focus on. CPI estimates are going to be in focus. All right, let's dive in. Momentum is positive, and I am going to warn you right now, you better be cautious about this reading because this is where the limitation of the data set comes in. The reason that this number is at +3 is because last Wednesday we had one of the largest momentum crashes in 25 years. You might have already forgotten about it. It was 2 Fridays ago that gold and silver collapsed. You probably forgot about it. But what happened here, if you look to the right, our crashers number, that number has gone down. It's fallen by 6 in the last 24 hours. And that's because the names of the stocks that have been really pulverized in the last week dropped off because they primarily had their big losses last Wednesday. This reading operates off of weekly to monthly. Now, I will point this out. The markets are likely going to react to less momentum breakdowns, so I would not be shocked to see a squeeze at the beginning of the morning and a nice move higher, possibly even touching as high as, I don't know, probably 70.50 to start the day on the S&P 500, and then possibly a resumption of trend, and this will reset probably somewhere around 10 o'clock. Stocks that I am shorting, BXP. I don't know what it does. I just like the fact that it is now on the list. See the stocks on the left side, right side. Comcast is our strongest momentum stock at the moment. Quest Diagnostics, Johnson Controls. Things that are highlighted green, that's where we want to have conviction. Gilead, Analog Devices, CSX continuing to do very, very well. CSX has another move. This is up, what are we, like 15%, 16% since mid-January. So strength is there. This will reset. I'm just going to warn you, we're working on trying to figure out how to maintain the pulse. But for the daily, it does look positive right now, and the cap weighted is pulling this higher. 65.47, doing math in my hand. It's going to be 69.80 on futures. That is going to be your line in the sand. All right, let's dive into this stuff real quick. So, can there be an AI Don? All you need is just a robot that makes snarky comments, right? A robot that makes fun of haircuts and jackets. Pretty good. And then says, yeah, that'd be good. We should make that. All right. NFP blowout, 130,000 beating expectations yesterday. Look, this is what happens when you have a slow news day. I have to go backward in time and start talking about things that happened yesterday. But the CPI number tomorrow is really what matters. Consensus at 0.3. Expectations. Strong jobs report with hotter wages. The Fed is likely to do what? Not change rates. And that's what you have to be paying attention to. Go to cmegroup.com. We are 34 days away from the Fed meeting. That is a lot of time to make mistakes. For the March meeting right now, if we look at comparisons, the odds have dropped and dropped and dropped. We were at 27% of a rate cut a month ago, and that was already long on those odds. Now we're all the way down to a whopping 6%. Number that we have to look at now is June. June is the more important month. And if we cannot get this under control by at least mid-March, then that move right here, this expectation for a rate cut, will start to dissipate, and that's going to weigh on the market. Out into April, not really much expectation for a cut. So June becomes the key line in the sand, and then it's going to be that October meeting that matters more. The market continues to price in cuts, but the Fed has been a little tentative about this, so be very cautious. Remember, I don't care about interest rate cuts. Doesn't matter to me. It's all theater, but the market does, and we went into that yesterday. We were talking about the legitimacy of economic data. We know that things are a little skewed. The reality is the market operates on these numbers. China cutting tariffs, Trump and Xi truce extension. This is bullish for a little bit of time. They cut their EU dairy tariffs. Great. We can get some sweet, sweet milk. sign of de-escalation across trade blocks, and I would look for this to be moving into positive trend into April. Every single economy is under stress right now. The EU's under stress, the United States. We are pumping capital into the markets through the Fed Reserve management. We're seeing this in Japan. We're now seeing China injecting U.S.-based $500 billion into their economy. And everybody recognizes that, yes, the trade bifurcation is going to lead to problems for economies because we're not operating in the traditional free market style, Ricardo style of trade. Hey, you guys wanted to get real nerdy real quick? Let's talk about mercantilism in the 18th century and then Ricardo and Adam Smith. Pass. Cisco, not good. Not a good company. No, just awful. Horrible guidance wreck. Terrible, terrible, terrible borrowing. Q2 did beat, but it's all about guidance. Remember, when it comes to earnings reports, guidance is what matters. I don't care what they did 3 months ago. I care what they're going to do in the future. Networking demand is softening, and their AI pivot is not enough. All right, McDonald's, shove it in your face. Hey, they got 2 drive-through windows at the same time. What an innovation. Value menu driving traffic. Remember, I'm going to remind you about something when it comes to McDonald's. Is awesome. I don't eat there a lot, but when I do, it's completely awful. Don't talk to me for like 2 days. It's a lot of Big Macs and chicken McNuggets. But I'm going to point out what this company does very, very well and why it becomes a trade and why you should always be paying attention to where this stock lives at any given moment. McDonald's does something that nobody else does. Do you understand that the McRib is an arbitrage play on pork? It only comes back when like pork is in backwardation. Literally, like that's what they're doing. They're trading meats. Not very good meats, by the way, but meats. When this stock moves to oversold, pay very close attention to when they start talking about menu innovation. Seriously, we are going to alter our value menu. We're going to try to bring more people in. People were mocking this stock, mocking it back in June. That was where we were at lows, 283. What did they do? They started a value menu war, and everybody had to follow. It doesn't matter that it's too expensive. Doesn't matter. They legitimately started the war. They were the first mover. They are a real estate company, 1. They are a management company, 2, a leasing company, 3, and then 4th, a trader of meats. When they are mocked, when this stock is at its worst, buy it. Don't look back. Just saying. It is undefeated. What else we got, Garrett? I don't know. What's number 4 on the day? Oh, gold. Very classy. There's definitely pork in it, Don. It's not good pork. It's pork-like. It's enough pork. Can't help you there. Smithfield ham, probably. Central banks are buying more gold. I can't believe it. It's almost like they don't trust the U.S. dollar. China has told its banks to stop buying new treasuries, basically limit their exposure. And it is a reminder that gold is the safe haven asset. Now, I had a great little trade yesterday that had been running on the GDX and the GDXU, and then it sold off yesterday and hit the stop, and then it screamed higher. I would remain long gold right now. I'm looking for a 5,400 move right now, and then a little bit of petering out. But we've seen some increases in forecasting for gold. Meanwhile, the IEA on demand forecast slashing. This is where energy has been running. Have you seen the XLE lately? Have you seen the XOP lately? We had some questions about that yesterday. The E&P space has been ripe recently. So ninth straight weekly gain in gold, but look at what the moves have been in energy. I want you to pay very close attention to the OILU. And if we get overbought there on both the RSI and the MFI, that is your opportunity to short the XLE, short the XOP. I think we're going to see some restructuring on this. Forecast for the year 65 on WTI, 69 on Brent crude. Last thing before we get to the runner, standard, not good. RJ, what's going on? Good morning. 44,200 Bitcoin metric. That's precise. Putting the 200 on there means they really stayed up late figuring out what the algorithm is telling them. They cut their target to 50,000 from 120,000. Regulatory uncertainty. That doesn't matter. ETF outflows weighing. That's okay. Trading below its 200-day moving average. Okay, that's fine. Remember, Bitcoin is a metric of stability and liquidity in the financial system. So we are heading into the current crypto winter. And I'm just going to tell you, you get me down there around that 44,000 level, I'm buying. Not because I believe in Bitcoin, but because Bitcoin to me is a liquidity proxy. And if we get out to 2027, 2028, and we're down at these levels, we stagnate economically, what are they going to do? They're going to print money. And where did Bitcoin go? Well, it surged from 2020 to 2021. It pulled back to 20,000, and then it moved to 120,000 on the backside of the liquidity cycle. I want to see that again, and I'm just going to say it. It's not going to make a lot of sense. It's not supposed to. You get down to 40,000, throw a little couple bucks into that, and then look for the long side. It's probably in the $200,000 range, somewhere around 2028, 2029. It will go down, and then it will go up because it is a tool for liquidity. It is not going to be banned. It is not going to be excommunicated. It will remain here. Just going to tell you. Right now, heading down, long-term up. DLTR, you're on the long side. What does that have to do with anything? Well, it's almost like I've been talking about for the better part of a few weeks. Well, stop share. Share again. Look at that. Look at all the sharing that we're doing. It's very exciting. DLTR. I love this chart. I absolutely love this chart. I love the fact that DLTR has pulled back the way it has. We had that pullback in earlier 2025. Strength here on VWAP, and what we're looking for right now is a continuation of trend. Money rotating into consumer defensives. So we've been sideways for a little while, couple of days, chopping between that 121 and 125 range. I like this. I like DLTR, and I like buying a spread, buying down somewhere around the 120 level, selling the 130, or buying the 125 and selling the 130. Being a little bit aggressive here, looking for that move back above that 20-day moving average. We're going to cut out real quick, and I'm going to pull up the EMA. I'm going to look for the exponential moving averages, and I'm going to give me a second. Just got to set that up for you. Just going to take 2 seconds. Don't get distracted. You'll be fine. Secret Agent Charlie, tell a joke. Okay. Apply. We're good. Cool. All right. So, what am I looking for? I am looking explicitly for a move back above these key moving averages. I'm looking for that 8 to cross that 20. And I like just buying at the money and selling out of the money. If we scale back just a little bit, you could see continuation, higher highs and higher lows. It's not going away. It's not going away. Nice little slope here. This bottoming out that we saw back here at 116, well, again, that was in that period of time that we discussed, that June 28th. That is where our January 28th. That's where our opportunities persist. Sell off, squeezing higher. I like 138 for this stock right now. All right. What else we got, Garrett? I don't know. SVM, silver, continuing to run. Remember, China got rid of the naked short capacity here. So what do? Buy the stock. Here's the low. Why is the low where it is? Because, well, that was in the wake of the silver crash, which is back here. That was actually the 20. Yep. There's your low. These stocks are moving like meme stocks. And now momentum returning a little bit, 11.43. I like selling spreads on this back down around the 10, maybe even the 9 level, if you can. Get a 20% return, 80% probability of profit, target 100% annualized gain. But I also just like a return of the metrics here on silver and gold. I could see silver being back in the 95 to 100 range. I think that's where we're going to settle. And gold, 5,400. All right. Ooh, McPorkhead sounds good. They should sell that. Where's the nearest McDonald's from the CME in Chicago? It's probably that. I don't know. Most expensive piece of real estate in Chicago, according to my unnamed sources and someone who told me at a 4 a.m. bar, is the Rock and Roll McDonald's in Chicago. I don't know if that's true, but I'm going to just keep claiming that. It's got to be true, and I bet I could find it on the internet. SRE. I don't know what this company does, but I like this chart. Not really looking for much. I'm just looking for a move back to 95. SRE, positive move. You see that crossover on that 8 and 20, and you can move on with your life. Fantastic. To the downside, TRU, PayX. What do? That's paychecks. Everything's getting beaten up in finance, and lower highs, lower lows. Yeesh. What did you do wrong? Not good. That's a little tough because, again, you're trading. Seems like there's a little bit of consolidation here, but big move down. I'm looking for an insider buy on paychecks. 100 down to 94. Lower highs, lower lows. It's not really a lot there. Screener, what are you doing? True. Well, this is a Blake story to me. Yeah. 65 downside minimum. Buy the 70, sell the, buy this. Yeah. I would get aggressive here. I'd just buy the $70 put. Maybe even out to next Friday. Set a 20% stop. See if the continuation happens. All right, let's dig elsewhere. FSLY, SNY, and Micron. Micron continuing to be in focus. Good to see that this has gotten its legs back. Big momentum move down that we saw last Wednesday, 2 Wednesdays ago. And Micron is just a continuation of trend. There's nothing slowing this down right now. Technology is improving. And I would like a continuation of trend toward that 450 level. If you are a little bit more conservative, sell a spread. Go down to the 320, 310 level. Look for a 20% return. And move on with your life. All right. Refrigerator magnet says, okay, sure. Utilities, sure. All right. You guys have all the facts. That's a lot of facts. All right. So, once again, in the room, everybody, what do we do today? How do we trade today? What is the way for us to focus in that 45-minute period that we're going to be doing today at 12:30. If you are not a member of TheoTrade, well, you need to get a jacket like this, and you need to name your own price and join us in the main room. Don starts at 9:30. I'm going to be doing 12:30. I'm going to be focusing now in the midday because the last hour, the way that volume operates, it doesn't really suit my momentum structure. So what we're going to be doing is from 12:30 to 1:15, 1:30, our focus is going to be on trading breakout stocks, breakdown stocks using volume weighted average price where opportunities emerge. So let's talk about that, right? We have to start with the very basic part of this. And that is just having volume weighted average price set up in your charts. If you don't have this, I'm going to tell you, you need to see a doctor if you are ignoring this advice, right? You should be getting your annual checkups. You should also be having volume weighted average price on your trading charts. It is that important, right? Very important, right? We want to make sure we get all of our scans in the doctor's office and on Thinkorswim. How do you do this? It's not that complicated. It's extremely complicated. Okay, I'm sorry, I lied. What you do is you go to this little lab thing. I don't know. I gotta come. Was that a beaker? Edit studies. Okay, edit them. And you're going to get rid of everything else that is on this screen. Everything. Like anything that you thought was important. Just throw it in the trash can. VWAP. 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 Okay? It's not a Cardi B song. It's volume weighted average price. And you're going to click it 3 times. Remember that. Dorothy. Wizard of Oz. 3 times. And then you're going to edit the first one. And you're going to make that one -3 on your deviation, 3 on your positive deviation. -3, -3. Make sure you change the color of these lines, or else you may start tripping out of your mind and wander off into the woods. Don't do that. Instead, just make it white. You leave the second one, that's fine, and then you go to the third one, and then you go to -1. You're going to do 3 standard deviation bands. It's very exciting because 3 is more than 2. True. So you end up with this kaleidoscope of color. It's a lot. It's too much almost. Let's make that white as well. Let's make this one white as well. Apply. Done. Okay. Well, this is still psychopathic, but it is what it is. Here's volume weighted average price. This line in the middle is volume weighted average price. This is an institutional magnet, everybody, of how equity markets work. Institutions will buy and sell around this range. This band and this band is your first standard deviation. 68% of all expected moves will be in that band. 97 between the second standard deviation band and 99.7 in the third band. So what are we doing here? Well, we're looking for reversions. We're looking for the S&P 500 or Micron or any other stock that has volume to move down into this band down here. If we hit that third band, we look for a reversal back toward volume weighted average price because that's where it wants to go. It wants to go home. VWAP is home. So every time that this tanks, don't go onto Twitter and try to figure out what's happening in the market. Run directly at it. Trade it. Look for a bounce back. Buy what is in the money. Now, here's where it gets fun. And that's what this is supposed to be. All of this is supposed to be fun. And if it's not fun, what are we doing? If you're not having fun in the markets, well, I don't know. Got to figure something else out. Maybe take something, maybe take a painting. That'd be good. Sit at home all day and just paint. Ugh. My mother and I are very, very similar. My mom said, I'm going to take up painting. And I just laughed and I just said, okay, this will last a week. Ken went over to her house. Mom, how's the painting going? Oh, I stopped that. Why? That was boring. Yeah. It's terrible. Painting is awful. LabCorp. All right, LAH, right? Look at how wide the deviation lines are. There is $15 there, right? So LabCorp is on our list of stocks, list of equities, names that we can rotate through during the day and look for opportunities as they emerge. CMCA, DGX, these are the top ones, right? These are the stocks that are completely overbought, pure momentum, top of the level. John Deere, very highly liquid stock. PPG, LabCorp, FedEx, CSX. These are breakout names. And they have been breaking out, 20, 30% moves in the last month. On the other side, you have these crashers. These are the stocks that have been beaten to hell. Warren Buffett's Moody's, Willis Towers, MSCI, MCO, right? Number one on the list. And it's chopping around, and there may just be at some point, because of the amount of selling pressure that has transpired in the last week and a half, a capitulation. Somebody just says, you know what, I'm dumping my whole position. And that drives a stock like this down into these deviation lines. Algos are programmed to buy. Well, what do? If you move into that band, you start to focus now Thursday and Friday. Options expire tomorrow. Also, here's the other nice thing. We're heading into Third Friday. So this strategy is pretty simple. All you're doing is taking what the market is giving you. You're looking not to scalp. This is not about scalping. This is just about looking for reversals. A 10-point move is only, 2.5% on MCO? It's not a lot if you're buying the stock. Oh, I'm very excited to buy a stock at 408 and sell it at 415. I get that. But with the options, if there is liquid options around these names, particularly heading into next Friday, this can make your day. This can make your week. This can make your month. So I just want to point this out. These are going to be the names that we want to be focusing on. We're going to focus on these names today at 12 o'clock, 12:50. I don't know what time it is. 12:30? 12:30 sounds great. Let's do that. Marsh, Capital One. Capital One. Yeah. Doesn't matter what they do. It matters that these are at the extremes of the bell curve. These are the stocks that are breaking out and breaking down. And I highly recommend that you keep an eye on Capital One, COF. That's the name of the day, particularly to the short side. If you get a pop at all in COF, look to fade that into the afternoon. Again, a lot of focus on AI on a lot of these names. I am short BXP. We'll see how that pans out. This is the first trade that I have done around this. In addition to that, FedEx, LabCorp, look for things that have highly liquid options. It is 9:19, which means I got to go. Yesterday, Don turned his music on so early that I could hear it in my ear. But I hope everybody has a really good trading day. If you have questions, of course, support at TheoTrade.com. Ask Garrett. That's my name. That's awesome. Mark has got some ideas, different things. Check that out. Mark is very busy. Thank you. If anybody has ideas on how to trade this, again, this is all new data, new ideas. We're looking for different ways to be focused. My high conviction names today will be built around those core names, ADI, BALL, Carrier, CSX, Gilead, and Johnson Controls. Thanks again to you, Mark. Really appreciate it. Don's coming up right now. See everybody at 12:30. Have a great trading day.